Welcome. It's your boy Shamiek-Ali, and welcome to the channel, man. On this channel, we talk about investing, entrepreneurship, and everything that involves you being able to make your money work for you. So today's topic, we're going to be talking about investing, what is investing, how you can utilize investing, and how you can start investing for yourself today. Now, before we get into that, I just want to talk a little bit about why investing is important and why it can be important to you. So basically, investing is, in my way of thinking, investing is basically you making your money work for you. Now, there's a lot of different ways that you can do this. But with basically in a nutshell, investing is you being able to put your money to work without you having to physically work. Now, with me, I'm a lazy person, so I like to invest and make my money work for me. Think of your money as employees. So just like a company has employees and people, they put people to work, and with the employees, they'll be able to work for the company and make money for the company. So now think of your money, every dollar that you have as an employee and every dollar that you put to work through investing, it's just less for you to do and less that you have to do as far as working for that dollar. So basically, in a nutshell, that's what investing is. So when it comes down to the misconceptions of investing. Now, a lot of people think, oh man, I need a lot of money. I need a lot of money to start investing. No, that is not the case. Shamiek is here to tell you that is not the case. When you can invest with as little as a couple of pennies to $1, it's all about what type of investments that you're looking at to start off with, just to build a portfolio. When I first started out, I started off by investing what little bit of money that I had and just building a portfolio from there. So it definitely doesn't take a lot of money to start investing. And that's one of the biggest main misconceptions about investment. You don't have to have a lot of money, and you don't have to be buku rich to start investing today. And little on down the line of this video, I'm gonna be letting y'all know basically some common ways that you can kind of get started with investing today. So be on the lookout for that. Now, mind you, a lot of people basically think that wealth is created amongst wealthy people when they just start out. No, a lot of people that have created wealth, they started out with nothing and they built up a portfolio and they built up a collection of assets that over time accumulated and created wealth for them without them actually having to work all those years and putting all that time. Because with investing, you can basically beat inflation. That's the only thing. That's the only way to keep up with inflation. That's the only way to beat inflation is by investing. Basically putting your money to work and investing your hard-earned dollars to continue working for you even when you're asleep. That's the other part of investing that I like, is that when you invest your dollar can continue working for you even when you're asleep. Your dollar doesn't need a day off. Your dollar doesn't need a vacation time. Your dollar is going to continue to work for you as it's doing its thing within your investment. So basically, those are some benefits and just some things, some insight on investing that a lot of people get confused about. With me, I had to do my own research and just look up, what is investing, what are some ways that I can invest today. Because I didn't have enough money to start out with. I only had a little bit, but I wanted to invest and I wanted to grow my portfolio straight out. So if that's you and you want to be able to start building up your portfolio and you don't have much to work with, this video is definitely for you, because we're definitely going to be going over some points of how you can basically invest with a little bit of money that you do have and start making that work for you. Because that's the biggest thing right now, is to be able to have Passive income is definitely something else we're going to be talking about. But just to mention that passive income definitely does play a part in investing your money. When you invest your money, like I said, you're making your money work for you, and that is a form of passive income. Passive means that you do it one time or here and there, and then it continue with little to no work, just a little bit of maintenance. Your investment continue to bring you income, over time, and gradually, residually be able to still bring you money. So that's one of the biggest things with that. When it comes to investing and passive income, it kind of does go hand in hand. So basically, anybody can start with these small steps that we're going to go over. So if you're a beginner, if you're interested in investing and you don't know where to start, this right here is going to be your guideline, and more so your encouragement on being able to just dive into investing and get your hands dirty and start building wealth for yourself today. So with that being said, let's go over the first few points that I want to make. Basically understanding the basics. I like to start from the beginning, kind of get you a good understanding for you to be able to grasp this information, for you to start being able to start collecting assets and, building out those streams of income with investing. So we're going to define what investing is and why it's crucial for building wealth over time. Now, like I said, I just gave you my definition of investing, but what I like to encourage here on this channel is for people to go ahead and do your own research. You have a phone in your hand, you have the power of technology in the palm of your hand at your fingertips. Don't be afraid to get on Google or get on any type of search engine whatever you use, to do your own research, and don't get discouraged. Do your own research, educate yourself. That's one of the biggest things that we advocate here on this channel. So with that being said, get on Google and type in what is investing. Those words, what is investing, or invest, and that'll bring up a definition of what investing is. So once you get that down and once you get an understanding of what that is, why is investing crucial for building wealth over time? Now, as I mentioned before, investing is all about putting your money to work, putting your dollars to work, making your money work for you on times where you don't want to work, or at times where you want to sleep, and you can still keep making money with that. So I think it's crucial, and I think it's very important in building wealth over time, because with inflation being a big factor in today's economy, yesterday's economy, and future economy, with inflation always going up, the value of your dollar tends to go down. So with investing being an option for you to be able to put your money to work, you're also increasing the value of your dollar over time. So over time, as your dollar decreases due to inflation, through investing, you can be able to increase or uphold the value of your dollar, and in some cases be able to double the value of your dollar over time. So that way you can be able to survive through inflations. Now, inflation happens every year, damn near more so often than you think. Prices go up all the time. So just imagine if your $1 today is worth less than $1 in a couple of years. The only way you be able to escape that and to be able to salvage the value of that dollar and to be able to grow that value and, make more money is by investing that dollar into an investment vehicle or some type of asset that'll be able to carry that value and boost that value up of that dollar. So basically, that's the crucial importance of investing, is by being able to beat inflation and being able to increase your income and increase your value and getting that much closer to building wealth. So that's one of the main crucial importance of why you should invest today. And you should definitely start with anything that you have. Just start investing. Educate yourself and figure out what interests you and what you can have access to, and start building your portfolio through there. So with that being said, there's with investing, I want to also tackle this misconception about investing, that everything is profit, everything is hunky dory, everything is glitter and gold. Nothing is glitter and gold with everything that you do, whether it's investing, whether it is working. See, with working, you run this risk and reward with everything that you do. So with working, the reward is that you get paid for your hard work, and whatever time you put in, that's what you get out of it. But the risk is, if you continue to work and you never put forth effort in finding ways to invest and making your money work for you, then you run the risk of always having to be able to work. The primary attractiveness to investing is to alleviate you working. See, with your money working, you don't have to. So that's the golden, that's just the attractiveness of having investments. The more investments that you have, the less that you actually have to work. Your investments work for you. So basically, with risk and reward, risk and return, when it comes to investments, there's always going to be a risk played into investing in certain companies or any type of assets. Like I said, appreciation, you have appreciation, then you have inflation. Appreciation is when the value goes up in something, and then inflation is when the price of something goes up. Then you have deflation. Deflation is when the price goes down. But basically, what you want to be able to keep in mind is that there's a risk for everything, but with the risk for everything, there's also reward. So you just want to be able to balance out. You're always going to lose. There's never going to be a time where you don't lose money, especially in investments. If you look at the charts that goes up and down, Wall Street, you pay attention that it goes up, goes down, goes up, goes down. One of the other things I want to encourage y'all to do is not panic, and do not focus on the chart so much. It's always going to go up. It's always going to go down. The most important thing is that you have more wins than losses. That's the main thing. That's the main thing that keeps you in the game, is to have those more wins outweigh the losses. Like I said, what you pay. So let's say if you invested in a company today, and the value of what you invested in that, the value of the money that you invested in that company, it tends to go down less than what you actually put in the company. And then by next week, it goes back up. If you panicked and just backed out and pulled all your money or left the company or whatever, a week from now, when the company goes back up and it makes more money, you're going to feel sick because you wasn't disciplined and you wasn't patient and you wasn't aware of knowing that, okay, prices go up and down all the time, values go up and down all the time. We're playing the long game. That's the biggest thing. That's the other biggest thing about investing, is playing the long game, making sure that you make solid investments in the beginning. Number 1, 2, do your own research, and 3, hold on to the investments. That's one of the biggest things I'm going to encourage here on this channel, is to hold your investments. This is for long term. These companies, they want to be able to grow, and with you investing with that company, you'll be able to grow with them. So try to focus on companies that actually have a good track record and that have been in the game for a long time. Those are kind of the ones that you want to pay attention to, because they also have a track record to show you why they've been around for a long time. So yeah, like I said, with investing, there is risk, but with risk does come reward. So just be mindful that everything is not just going to be on the up and up. There's going to be times where the market is going to be down a little bit. Price will go down, value will go up, what have you. Just don't focus on that. Don't panic. We're in this for the long game. Do your research and just focus on building your portfolio around strong assets. So, yeah, let's talk a little bit about the different types of investments. So there's a lot of different types of investments out there that you can start to use to be able to build up your portfolio. Like I said, research what it is that you can understand first. So there's different things. There's stocks, there's bonds, these different types of investment vehicles that you can be able to utilize to start building up your portfolio. And what I encourage is diversity. So within your portfolio, you can have a little bit of stocks, you can have a little bit of bonds, you can have a little bit of REITs. I suggest to diversify your portfolio so that way you can have multiple ways, multiple incomes that fall into your portfolio, so you're not just banking on one way of making money. So with me, I started out with stocks, dividend paying stocks, and I built up my portfolio that way. And then once I started educating myself and learning other assets that were available and that I can be able to access, from there I started gradually, buying a bond here and there, buying a REIT, just buying different things and diversifying my portfolio. So that's one of the main things, is to have different ways for you to be able to make income. Don't bank on just one way of you being able to pull some money in. One of the best ways for me to paint a picture for you is, think of it like a table. The table has 4 legs on it. Think of each leg on the table as a different stream of income. The table has a better chance of standing up on 4 legs than it is one. So if your one leg represents one stream of income, let's say from just dividend stocks alone, yeah, you might be making money and the table might stand, but in the long run, the table will be more sturdy and the table will do better if you have more legs, more streams of income within your portfolio. So think of your portfolio as a table and think of the legs on the table as your different streams of income that you have within your portfolio. So I'm just going to rattle off a couple of different examples of assets that you can utilize today. So we have stocks. So stocks, like I said, is one of the most common and one of the most lucrative ways to start investing. You have different types of stocks, and I'll be making another video going into detail about the different types of stocks and what they do, and how you can benefit with having those in your portfolio as well. But you have stocks, you have bonds. Now there's different types of bonds too. You got I bonds, you got municipal bonds. There's all different types. We're going to be making a video about that as well. You have real estate. Now with real estate, and I'm invested in real estate as well. One of the main things with real estate is there's a few different ways you can invest. One, it's with the physical, with you going to go get a property and you physically having to manage it, and you either flip it or you rent it out. And those are some ways that you can get into real estate. And then you have REITs, which stands for real estate investment trusts. And real estate investment trusts are basically stocks of real estate companies that either are involved with apartments, commercialized buildings, just a whole slew of different variety of properties that are offered up by these different companies, to where you can still invest and get a percentage of whatever income is coming from apartment buildings, commercialized buildings, and all those things like that. So those are a couple of ways. And then here's an extra one. I don't know if y'all heard about crowdfunding, but there's a big thing with crowdfunding and you being able to utilize whatever dollars that you do have and investing in crowdfunding in order to be able to get your foot in the door with real estate investing. So you got crowdfunding investing, you got REITs, and then you got the physical, which is you getting a property, either renting it out or flipping it. So those are a couple of different ways when it comes to real estate, how you can start investing in that. And then you have mutual funds, which is like stocks, but mutual funds are more so a group of different companies within one stock that you can be able to invest in. So let's just say with dividend stocks are individual stocks of companies. So with mutual funds is a group of those of different companies. So remember I was talking about diversifying your portfolio. With mutual funds, you can be able to diversify all your investing by just investing in one or two different mutual funds that have a bunch of different companies in one. So back to the table reference. Think of the table as the mutual fund and the legs are the different companies holding up that stock. So if you had CVS, Microsoft, McDonald's, and JP Morgan, and those are all the legs that are within that mutual fund. With you investing in that one stock, you basically split your dollar into all those four companies. So that's basically what a mutual fund is in a nutshell. It's just a group of stocks put into just one for you to be able to invest. And that's one of the good ways for you to invest your dollar and diversify all at the same time. So definitely look into mutual funds as a good example of things that you can start out with by investing. So with that being said, moving on to setting some financial goals. Now that we realize and have an understanding on what investing is, and now we have some understandings of just the basics. Let's talk financial goals and let's set that up. So what you want to do is you want to set clear goals for yourself, and what I mean by is you want to reevaluate what it is that you want to do, where you want to go, and where you're at right now financially. So with that being said, basically you want to be able to go through all your expenses. What I do is I outline all my expenses. I also make a list of things that I want to do. I also sort out a list of bills and expenses that I have, just to kind of get a consensus on what needs to be paid, what do I have to work with, and all the incomes and stuff. So that way you can get a realization of where you're at financially and where you want to be able to do. Now, as far as setting up financial goals, you can set small goals and long-term goals, but I suggest starting off with small goals like saving a certain amount of money, or start putting up money towards this type of investment, or it could be anything that you can set up for yourself. But the first thing I suggest is to figure out what your expenses are, all your bills, all your income, and just kind of consolidate that, so that way you can actually see and get a clear, concise vision on what you need to do and the steps you need to take to start getting towards those goals that you're trying to make. So it could be anything from you saving up for a car, or you saving up for a house, or you want to be able to go on make a big purchase on a vehicle, or you can go on vacation. Whatever that looks like for you, you being able to map out and sort out what your income is, your expenses, can give you kind of a clear, concise idea on where to start with that. So let's talk a little bit about so we talked a little bit about just basically diving into financial goals and before investing. Now, one of the main things is if you trying to invest just to make a lot of money, You're going to be a little bit disappointed because, like I said before, this is a long-term process. This is the long game. This is for your future. Basically, this is for years down the line where you can be able to utilize the money. You can thank yourself, give yourself a pat on the back, and just make sure that, hey, our money is working for us now. We got more income coming in. So that's kind of like where we're going at with this. So make sure that, like I said, you can set short-term goals and then you got long-term goals. Figure out what your long-term goals is. That could be you buying property, a couple of acres. It could be you wanting to buy a store or buy a restaurant, whatever that is, whatever long-term goal you have for your money. Make sure you set that. Make sure you be clear and concise on what that is and how that looks for you, because everybody's financial goals is different. One person could be, just wanting to save up to go on vacation. Another person could be wanting to save up to get a restaurant or a house. Everybody's thing is different. Figure out what that is for you and figure out what your expenses are and all that, just so you can have an idea on what to do and where you're standing at. All right, so what you want? What some short-term goals would include, like saving, like for retirement, buying a house, like I mentioned, funding education if you're trying to go to school, college. Some long-term goals would be, buying property, also buying a house. Basically, with setting goals, it helps you create different investment strategies and figuring out different ways for you to get to that goal. Like I've always found is if you write down your goals and you map things out and kind of sort things, it kind of gives you a good idea on what you need to be doing. When it comes to investment strategies, there's a lot of different investment strategies out there that you can utilize. One of my investment strategies is by whatever money I set aside, a percentage of money that I get from my income, and then I automatically go ahead and invest it in my portfolio. I don't even think about it. Just take the money, throw it in there, and like I said, it makes me money. It continues to work if I'm asleep. It continues to work if I'm there or not. So that's just one of my investment strategies. I know it's lazy, but hey, it works for me. So like I said, whatever works for you, figure out what that is. Everybody's investment strategy is going to be different. So just figure out what that is for you and get the ball rolling. So we covered that. Let's talk a little bit about risk tolerance. Now, we talked a little bit about this before when I said mention risk and reward, balancing that out. When it comes to risk tolerance, it's a very essential thing to understand, especially when it comes to your own goals. When you're setting up your own goals and what you want to start out with in your portfolio, the risk part is definitely going to play a factor, because this is what's going to determine what it is that you kind of dabble in and what you're attracted to. Now, when it came to me and dividend stocks, the more I learned about it, the more I got interested in it, and the more comfortable I felt with investing my money into dividend stocks. Now, when that being said, that's why I'm telling y'all to do your own research and get comfortable with your understanding. Once you're understanding what it is that you're trying to invest in, you'll feel more comfortable. You'll have a more confidence in investing, I should say, and investing in these things, because that's the main thing. Is it's gonna be daunting. It's gonna feel like, am I making a good decision by investing in this? Yes, you are. But it's going to feel like that because this is your first time doing it. And as you're learning, you are taking action by investing in this asset. So basically, all you have to do is do your research, get comfortable, understand it, and figure out this is what I want to do and this is what I'm attracted to. So when you basically find whatever asset that you're trying to use to invest in, and you get more familiar with it and more comfortable with investing in it, everything is going to come easier to you to be able to continue investing and continue to build up your portfolio with that specific asset. And I suggest to use one asset at a time. So start off with, if it's dividend stocks that you understand the most, start out with that, build up your portfolio with that, and then gradually educate yourself and teach yourself on the other assets. Continue to look up and do your own research on that. So basically, we're going to talk a little bit about asset allocation and diversifying investment portfolios. So with doing that, basically all you want to do, like I said before, when you're diversifying your portfolio, don't be afraid to look up other companies and try different sectors. And we're also going to be making a video about that when we talk about different sectors and different types of stocks. Sectors, I mean different industries. You got the food industry, you got tech, you got I want to say it's like health, pharmaceutical, stuff like that. So you got all that. We're going to be talking about that too. But basically, you want to outline a couple of steps to building your portfolio and diversifying your portfolio. So basically picking like different stocks that do great, but also they tackle different areas. So if you had food in your portfolio, you got medicine, which is like CVS, JP Morgan, and then you have tech, Microsoft, and all that, Google. So that'll be a good diversified portfolio for you to start out with. So basically, I want to touch a little bit back on tolerance and why that is. It quizzes you on your self-reflection, because it's also gonna define what are you willing to invest in, what are you willing to, because at the end of the day, this is all about you investing your hard-earned money and making your money work for you. So that's why I say always do your own research, figure out what companies are you attracted to. Here's a good point to go by. If you want to find companies that you want to invest in or that you think are good to invest in, pay attention to the companies that you already use, brands that you already use. So just for an example, let's say if you are an athlete or just anybody that uses Nike products, if you Nike shoes, Nike clothing, Nike anything, if you are already an avid consumer, because this is looking at it from a consumer standpoint. If you look at a lot of the brands that you use on a daily basis from a consumer standpoint, like Nike, anything that you eat, McDonald's, whatever, those are companies that you might want to look into investing in, because you as an avid consumer, as an avid fan, as an avid customer, you're definitely contributing to that business. So anytime that business does good, you investing in that business, that means you do good. So you having a percentage in a company that does great, it goes hand in hand. So definitely look into that when it comes to minimizing risk. I use that as to minimize risk. And what I mean by minimize, I mean just bringing it down a little bit. That's not diminishing risk. It's just minimizing it. Focus on companies that do good, that you're familiar with, and that have been around for a long time, that have a good track record. So those are a few key points on finding companies that you want to start in your portfolio, and just minimizing that risk just a little bit. So just to go over that, basically understand your own risk appetite. Where's your tolerance at? Everybody's tolerance is different. So for an example, I knew for me, I didn't like sports betting because I didn't like the fact that you put in your money and you lose money when you lose a bet, versus I rather put my money in investments and let my money work for me, so that way I can get I always get a ROI, or rate of return. Um, but you basically don't want to invest in anything that you don't have a tolerance for. When it comes to that, is basically you getting familiar with certain assets that you're comfortable with investing, and that you have a good knowledge of when it comes to that. So basically, offering methods for assessing risk tolerance, such as quizzes or self-reflection, is also a good way. Just by making sure that you know what you're doing and you know what you're getting into. Like I said, it's no worse feeling by putting your hard-earned dollar into something that you're not familiar with, and it's not much of a guarantee, because at the end of the day, we want to be able to get money, wealth, and just growth from this. And at the end of the day, it's all about growing and building up your portfolio. So uh, basically, risk tolerance can influence investment decisions and portfolio allocation. So when it comes to uh, making sound decisions, and this is just by making decisions on everyday things, whether you pick healthy food over unhealthy food, whether you pick water over soda, just certain investment decisions and just risk tolerance will definitely influence your decision on what you're investing in, and what your tolerance is on what you can withstand and what you're willing to invest in. So, building a investment portfolio. Now, when we get into this is basically gonna harp on everything that you would need to just start building up the portfolio and start getting some assets underneath your belt to start investing. So, when you build your portfolio initially, diversifying the investment portfolio is going to be the best way to go. Uh, Asset allocation strategies, a whole bunch of them out there, just based off of your risk tolerance and financial goals. Um, the importance of the periodic portfolio rebalancing, maintaining desired risk levels. So every so often, you want to check on your portfolio, see how it's doing. You definitely want to see what's doing good, what's not doing good. Just check in, see if you need to make some adjustments, see if you need to buy more of the company, see if you need to sell, whatever. Just proper maintenance and just, micromanaging, peeking at your portfolio. It's like checking up on your kids or checking up on a dog or a pet that you have. You got to check on it every day and make sure it's just doing good. So yeah, basically that's what that is with building an investment portfolio. You just want to be able to diversify, do your research, start dropping in that dollar and start making in that investment, and then you'll start building up your portfolio. So with getting started today, here's just a few common ways that you can start utilizing and getting started, getting your hands in the game. So one of the best ways you can do this is by looking up a brokerage account. What you're going to need to make some investments is a brokerage account. And I'll also be making another video going over the recommended brokerage accounts that I recommend and that I personally use. So what you're going to need is a brokerage account. You're also going to need a bank account that you're going to have to wire to the brokerage account, so that way you can start investing in stocks and stuff from the brokerage account. You're also going to be I recommend for you to actually have this website called Seeking Alpha. Is for you to be able to look up the stats and all the information on stocks. So I recommend that too. I also will be talking a little bit more about that, the different tools that I use to identifying stocks. So like I said, a brokerage account and a bank account is the two things that you're gonna need to start out. So once you have that, then you can be able to utilize investment apps such as you got Robinhood, you got E-Trade, you got Fidelity, you got Vanguard, you got Charles Schwab. These are a lot of the different brands and tools that I use myself, and that I'll also be covering in a different video, going over the significance of each brand, what they offer, the tools that I use, and all that good stuff. So be on the lookout for that as well. But yeah, you're gonna need a brokerage account, and then whatever app that you use to start investing. You can use Robinhood, you can use Ameritrade, whatever you can have, whatever you have access to. Like I said, start out with that. They make it easy for you to get into the markets that way, so it's definitely a good starting point. What I also recommend is starting with low cost index funds and ETFs for beginners. So there's going to be a lot of different ETFs. There's going to be a lot of index funds. Like I said, ETFs, mutual funds, and all those are groups of stocks that they'll have in one stock. So it'll be a group of them in one. But what you want to do is the where you get a skin in the game and how you get your foot in the door is by investing in the low cost index funds. So the ones that don't cost as much. But like I said, do your own research to make sure that the company is doing good, because just because it's cheap, just because a stock is cheap doesn't mean that it's a good stock. Like I said, always evaluate and do your research on that. But that's a good way for you to start building up a portfolio of stocks that you can have, is by focusing on the low cost ones. So that's one of the ways that you can get. That's one of the ways you can get started today. The other thing I want to kind of touch about is investing for the long term. Now I know I talked about this sporadically throughout the video, but I want to draw a strong emphasis on the long term when it comes to investing. Investing is a long-term process. This is not a get-rich-quick scheme. If that's what you thought this was, I'm sorry to disappoint you, but this is not what this is about. This is not what we do here on this channel. Well, on this channel, we encourage people to make money work for them, and to be able to provide different ways for them to be able to live and be able to live off of what they're investing. At the same time, we're all about encouraging people to create wealth for themselves today. So that's mainly what the gist of these videos are going to be about, is to build wealth for yourself, create generational wealth and income for you to be able to utilize years on down the line. So that's basically what that is. So to emphasize the benefits on long-term investing, so there's definitely different ways for you to be able to utilize long-term investing. One of those ways is called compound interest. Now, compound interest, I'm not sure if you heard of it, but it's basically when your money collects interest and starts to collect interest and accumulates over time. So if you have a bank account, I don't know which bank you use, every bank is different, but they'll have a percentage on how much your money will earn just by sitting in the bank. So just for an example, let's say Bank of America, if you see anything that says APY, that just means that the percentage that your money will get from sitting in that bank will get that accumulated just by sitting in there. So some banks have APYs that's like 0.01 or 0.0. It's like real low. That just means that it'll take a certain amount of years for your money to double or for it to make a certain amount of money. So basically, when it comes to compound interest, that's a good way for you to make some money by a good way to get around that is by using a high yield savings account, and that has a higher percentage of your money sitting in there, and you get more of an interest. But we'll do another video talking about that as well. The other way is dollar cost averaging, and basically we'll be going over that in another video when I talk about compound interest and dollar cost averaging. But those are just a couple of different ways for you to be able to start earning interest on your money and have that accumulate, because then your money will double over time. So that's another way to make your money work for you. Now with long-term investing, there's other two factors that you're gonna have to find success in this, and that's called patience and discipline. And with achieving those two things, you can definitely find investment success. With discipline, you gotta be self-aware that instead of spending your money on frivolous things that's not bringing you money or not bringing you income, it's definitely going to be detrimental to your investing success. Taking that money and making that money work for you to bring in more money, that's definitely the way to go. So definitely pay attention to that. And if you don't have discipline, it's okay. You can always learn, you can always develop those routines and those habits of disciplining and just being able to always be smart with your money, as I say. So that's that. And then when it comes to patience is the other half of the battle. Is, like I said, there's going to be times where you see the market going up and down. Don't panic. Have patience. Believe that your research that you did and the companies that you invested in are going to go strong long term. But at the same time, just to piggyback, there is risk with everything. Everything's not guaranteed. Keep your head on the swivel. At the same time, be smart and diversify your portfolio, because diversifying your portfolio is going to minimize the risk of you losing more money than you are gaining. Like I said, it's all about balance. You want to have, as long as you have more gain than loss, then you should be good, in good standings with your investment. So basically, with those two, patience, you're gonna need patience, and you're definitely gonna need discipline on your investment journey. If you can master that, you're definitely in good standings, and you definitely have a good, healthy wealth journey building. Because this is definitely not for people who definitely want to go and spend money on frivolous stuff, things that are depreciating value and just don't bring you any money. There's definitely going to be those times I get tempted, but with discipline comes into play, and with patience, taking my time and, focusing on the long term. But yeah, so basically, when it comes to like a successful long-term investors and the strategies, you have a lot of different successful investors out there. You have Warren Buffett, just a lot of different people. I can't really rattle off any names, any other big names right now, but when it comes to Warren Buffett, he's definitely one of the people that stick out to me when it comes to just investing and things of that nature. So if you want to be able to come up with some investment strategies for yourself, I suggest that you study some of the greats. Warren Buffett is one of the people that I actually look into and study, because just how his investment strategy is, it's easy to understand, and it's easy to it's very accessible to do. It just takes a little bit more elbow grease, and it takes a little bit more time and determination. So that's where the discipline and the patience comes in. But with conclusion, all the key points in this video where we talk about understanding investing, beginning investing, the basics, the different pros and cons. Well, not pros and cons, but the different risks and rewards that come with investing, the long-term benefits of investing, the risk of not investing. All those things have definitely been a factor within this video. The one thing I want you to take away from this video is that you learn patience and you learn discipline. If you can take those things and diversify your portfolio, you definitely will find some success in this investment journey. As I've had over time, it's with patience accumulating, and with overtime with discipline and learning. I definitely can say that I came a long way with investing, and I hope I can bring you a long way with that too. So I definitely encourage y'all to take action today and then start investing in different ways for you to be able to build your portfolio. I mentioned a few assets that you can start utilizing, and look up what a brokerage account is. But I will be making a video touching base on those different brokerage accounts and brands that I use, different companies, I should say. So I want you to go out and start your investment journey today. I want you to find different stocks, different companies that you are already interested in, that you use. Find a brokerage account, sign up. Most of them are free. Do your research, link your bank account, and start investing today. Take that risk. Like I said, everything has a risk, everything has a reward, but there's no greater risk from you not investing. And that's one of the most important things that I want to imprint into your mind. So with that, basically, that investing is a journey. And with that journey is going to come obstacles that you're going to have to overcome. But it's never too late to begin investing. As long as you start today, start right now, because wealth is in your future if you start investing. But you have to start today. You got to get the ball rolling. You got to rip the band-aid off. You got to get off the porch. Whatever you want to put in your mind to start today, get on it, get the ball rolling. So with that being said, that concludes this video. I'd like to thank you for watching. I definitely appreciate you watching this video and just taking the time to be a part of this channel. If you found this video helpful, go ahead, like, subscribe, turn on post notifications, definitely share. Leave a comment on other videos that you want me to do and go over. I like to talk and give great detail on any topics that I'm doing. So just comment on other videos that you think that you want to see me do, and I'll definitely start dropping those and putting that out. Also, don't be afraid to message me and let me know of any type of videos that you want to see, suggestions on video topics that you want me to do. Also, be sure to join the Patreon to support the channel, to see more videos like this so that I can produce. And, we're going to put out some more stuff, man. So definitely be on the lookout for that. Basically, leave your thoughts, your questions in the comments. We're definitely going to be putting out more videos. If you want to see more investing videos, more videos on just how to make money online with Wi-Fi, we'll also be talking about that as well. But with that being said, this concludes this video. I'm your man, Shamiek-Ali, and see you next time. Peace.